I want you to address the obvious. This looks like a move by an outfit called Robinhood, which is supposed to be taken from the rich and given to the poor, and doing exactly the opposite. That when the big guys, including one of your main investors in your company, started to lose, you shut down the game to starve the little guy. Fair criticism.
Okay. So here we go. This is my first video that turned out way longer than expected. So it's going to be broken down into parts. I decided to start out my video with that little clip because the CEO gets absolutely grilled. And as the video progresses, you'll see how all of this unravels. I've dug up what I could to fact check a lot of what you're about to hear and to expose things you might not have even known about Robinhood and its business partners. I'll let most of the video play and we can go over the data and evidence as well in just a second. But first, let's rewind for a moment. GameStop, the holy grail of absolutely ripping people off when it comes to trading in games.
You're like at $38. If you want
cash,
$49.84 trading credit or $38.40 cash.
yeah, screw it. We're gonna go cash.
$38.40, okay?
Deal. And that is how many games?
49.
Alrighty, thanks, sir. Appreciate it.
Is now suddenly a meme that has profoundly exposed Wall Street's underbelly. As the wise and all-knowing people of Wallstreetbets, who yes, literally refer to themselves as autists and degenerates, who literally debate what it means to be an autist, flooded into apps like Robinhood, Webull, and M1 Finance, just to name a few, to take advantage of the stock market. They essentially try to pull a real-life version of,
all you care about is money. It's not about money. It's about sending a message. Everything burns.
and they sort of got away with it, causing GameStop stock to reach a peak of $347. But more on that later. Now, if you're watching this is not going to be a video about how shorting stocks work. There are plenty of videos about that already. What this video is about is to show you what has been exposed in the wake of this whole GameStop stock scenario. One side feels like the whole economy is rigged against them, and that Wall Street is playing Big Brother. The hedge funds don't make money predicting the stock market, but instead by engineering the stock market. While the other side claims they're just following financial obligations and are protecting their customers. But first, I gotta do it. It was gonna happen in this video at some point. If you want the opportunity to join this whole getting revenge on hedge funds frenzy, or to invest in Dogecoin or learn stonks, here is a shameless link to my Webull in the video description. And full disclosure, when you use my link to sign up, I get free stocks and you get free stocks too. This video originally I thought would be like maybe 10 minutes, but as more and more research was done, it kept getting longer and longer. So I'm just gonna present one part of a multi-part video.
Stocks, which are the big hedge funds. How are you helping the little guy investors?
Well, I know that there's rumors around that, we were directed by market makers or other market participants to do this. And I want to be 100% clear. This decision was not made on the direction of any market maker or other market participants. Robinhood, as a brokerage, has lots of financial requirements, SEC requirements. We have to put up money at clearinghouses. The amount of money that we have to put up depends on market volatility. And
while working on this video, I really did try to do my research to see the other side. This one part of the interview is the only part that what he's saying is actually justifiable as to why they had to halt trading. He had to meet money requirements for their clearinghouses. We'll go over exactly what a clearinghouse is later in the video and how they work.
We're in a historic situation where there's a lot of activity and a lot of buying concentrated in a relatively small number of symbols that are going viral on social media. So we haven't really seen anything like this before. And to prudently manage the risk and the deposit requirements, we had to restrict buying in these 13 stocks. But customers that held them could sell throughout. Thousands of other securities and stocks on our platform were available to freely trade.
But that's the thing, is that the trust is in question, because it seems like the only people who are getting hurt were the big shots. And that if they were benefiting from this, your small investors now believe that you wouldn't have shut down the game. And just one thing without getting in the weeds here. You don't control the listing venue for GameStop. Now, I used to work in finance, so I know this stuff, but the audience doesn't need to. The New York Stock Exchange does. So if anybody was going to control the listing and shut it down, it should have been them, but it wasn't. It was you. And the reason that they do it is very limited. They do it because they think there's evidence of fraud, or they think that there needs to be a material disclosure by the company that hasn't been made. And that's done to protect the investor. You check none of those boxes here because you don't control the venue. You didn't know about any information that GameStop or any of these other stocks needed to put out. You don't have any reason to believe there's fraud that you've articulated. And you're certainly not protecting these people who've been living the dream of making money, especially at the expense of the big guys. So why should people believe you did this for the right reasons?
Well, we have no choice. We have to comply with all financial requirements. And
The SEC
regulations.
hasn't said you had to do this.
While making this video, I did do thorough research to see if there was anything about the SEC asking Robinhood to halt trading, and I came out empty-handed.
Well, lots of brokers have to comply with these financial requirements and have issued restrictions on some of these names. And this is an industry-wide thing. You yourself mentioned that other brokers this week have imposed restrictions. And
That part is actually true. Here's a list of the brokers who put restrictions on GameStop and AMC stock, among some other stocks as well. Not many people know, but there was 12 stock trading apps in total that decided to restrict trading. This wasn't something that just Robinhood did.
imposed restrictions. And not speaking for other firms, but for Robinhood in particular, this isn't because there's deals happening with market makers we route to or market participants.
But then
These
why did you
are-
allow people to keep selling but not buying? The reason that is so troubling to people is that they were making money buying the stock because they were against the short side. And so by enabling them to sell but not buy, it sounds like you were allowing the hedge funds, and again, one of them owns a piece of you, and they had a big short position, and that looks like a stinky conflict that you didn't come out straight on from the start. Address that.
Okay, now I know for some of you that can be quite a lengthy video, but there's a lot to unpack, and I'll put a breakdown of the timestamps if you want to skip ahead during any part of this video in the video description. But before we get started, it's not exactly about is Robinhood lying or if what they did was even illegal. It goes deeper than that. It's about the whole financial system, Wall Street, government officials, Robinhood's business structure, and the degenerates of Wallstreetbets. Robinhood was built on this notion of the democratization of finance. Cheered on initially as a company that helped the little guys start to invest, even if it was just a couple $100 without having to pay commission and all these other hidden fees and expenses. Here's even a tweet they sent out back in 2016 that hasn't exactly aged well, but few people ask how their business model actually works. Most people have no idea. Well, Robinhood makes money 4 different ways. One being through premium features. You might have seen this on the app. They put it behind a paywall, things such as Robinhood Gold and margin trading. But the most important way Robinhood makes money, and here's the one that really stands out. It sells information about your trades. You see, you don't pay anything to Robinhood to use its service. Someone else does. It's far more lucrative, and some say explains why it's willing to stop you from trading, since you're not really the customer. You're just like a user or data point to them. It's not entirely wrong to run a business this way, provided it's transparent. The problem is that it means the company's interests are not aligned with yours. They're aligned with those of their actual customers. But investors like you aren't Robinhood's customers. Instead, the company sells what are called order flows, which essentially hold information about the transactions of customers like you to third parties. Those third parties are the ones who execute the trades, but crucially, they get access to the data. And the data is a financial equivalent of striking gold, especially to high-frequency traders who make money using like sophisticated computer algorithms that they feed mountains and mountains of Robinhood's information to, so they can always try to be one step ahead of you. This practice Although highly contested, and it is becoming frequently more and more banned in places such as England and Canada, to name a few countries. One key takeaway is when Robinhood is free for you to use, Robinhood isn't the product, you are. And it turns out that makes all the difference in terms of how the company treats you. You might have heard the word Citadel thrown around a lot when hearing about the whole Robinhood situation. And that's because, as it turns out, the primary company, or should I say customer, who Robinhood sells your data to is a hedge fund called Citadel Securities. These middlemen are ultimately what made Robinhood worth billions. Turns out, selling people's trading information is the new oil, so much so that Robinhood generated $271 million from all order flow payments in the first half of 2020 alone. And this helps to explain a lot of Robinhood's valuation. As for Citadel Securities, though, their algorithm has generated them over $2.36 billion of net income from this practice in the first 6 months of 2020 alone, which is a little less than the bailout of $2.75 billion that hedge funds Point72 Asset Management and Citadel gave to Melvin Capital last month after its multi-billion-dollar loss. However, what the middlemen do is even more shady. The whole reason Robinhood even goes through middlemen in the first place is because of cost savings. You see, Robinhood and other brokerages don't execute trades directly. It's just too expensive. So they usually work with a middleman called a market maker like Citadel Securities. When Robinhood directs a transaction to one of these third parties, the market maker learns what stock is being bought or sold before the trade actually happens. Citadel and other market makers pay Robinhood a small fee for this privilege, which give the market making firms information about every single person's trades and trading patterns, how long you've been on the app, how much money you have deposited, you name it. Citadel claims it uses this information to improve its trading algorithms. But Robinhood routes more than half of its customers' orders to Citadel, by far its largest market-making platform by volume. But can these middlemen be trusted? Do we really have reasons to trust them? Well, here's what I could dig up. A lot of people claim these middlemen, these hedge funds, manipulate markets all the time and cheat and get away with it. High-frequency traders such as Citadel Securities specialize and excel at stock trading algorithms. They hire tons and tons of programmers to develop more advanced algorithms that many claim front-run your orders that they buy off of Robinhood. One big conflict of interest is, are these companies doing anything more with that information they are given than just simply executing orders? Or can they use the large data pools to manipulate entire markets and front-run your orders? Now, the issue is these middlemen that actually place your order know what orders you want to execute before they actually happen, since they're the ones executing your order. And they can run ahead and act on these orders to benefit themselves. This is what is known as front-running, and it has been illegal for quite some time, but there are ways to bend the rules or just straight up break them, because a lot of the times the penalty for breaking the rule is lower than the benefit you receive from breaking it. So right now, when you go on your phone and place an order on Robinhood, there's a chance Citadel could get that information and have their AI buy or sell whatever stocks they need to be ahead of you. This isn't just something I'm pulling out of thin air. Citadel has been fined in the past for this very thing. For example, Citadel Securities got caught front-running orders and was fined $700,000, which is a drop in the bucket for them. And at one point, the SEC fined them $22 million for having an algorithm that, to put simply, just gave you poor trades, while Citadel pocketed the rebates for executing your trades. An example of front-running would be when someone or something who can execute stock trades have important information that could swing the stock one way or the other. Let's say it's Tesla, for example. And this person or thing, I mean, it could be a computer, decides to prioritize their stock orders in Tesla before processing your order and or making the information public. They can see the orders coming in to pump or dump Tesla stocks before they take effect, and they can cut ahead of the line to buy or sell to maximize profits, and then they process your order. So if Tesla does an amazing job and its stock is going to shoot to the moon, they can let your order to purchase Tesla take a back seat to theirs as they front run your orders. Citadel is just one of these companies that receives the advanced information for Robinhood. The order lasts just a split second before a computer processes it, but companies like Citadel have super sophisticated fiber optic networks literally in Manhattan, oftentimes right next to the New York Stock Exchange, that have super sophisticated algorithms that can, in a fraction of a second, buy or sell a stock before you do to maximize their profits at your expense. All of this happens in a fraction of a second, hence the name high speed or high frequency trading. To put it in layman's terms, Robinhood takes your trading data and sells it to Citadel Securities, who see your stock trades before they happen. They have been caught front running your trades and processing your orders afterwards. And this front running adds up to billions of dollars that you miss out on. It's a model that some claim is fundamentally exploitative and is stealing, that it leeches value off of everyone who invests using Robinhood. As for how hedge funds manipulate markets, here's a clip I found of Jim Cramer from 2006, a former hedge fund manager, talking about ways hedge funds would manipulate markets. This is the best video I could find of a total, upfront, honest answer for how hedge funds are run.
You know, a lot of times when I was short at my hedge fund and I was positioned short, meaning I needed it down, I would create a level of activity beforehand that could drive the futures. It doesn't take much money. Similarly, if I were long and I would want to make things a little bit rosy, I would go in and take a bunch of stocks and make sure that they're higher, and maybe commit $5 million in capital to do it, and I could affect it. What you're seeing now is it probably is bigger market now. Maybe you need $10 million in capital to knock this stuff down, but it's a fun game and it's a lucrative game, and you can move it up and then fade it. That's often creates a very negative feel. So let's say you take a longer term view intraday and you say, listen, I'm going to boost the futures, and then when the real sellers come in, real market comes in, they're going to knock it down. That's going to create a negative view. That's a strategy very worth doing when you're valued on a day-to-day basis. And I would encourage anyone who's in the hedge fund game to do it because it's legal,
right?
And it is a very quick way to make money and very satisfying.
Okay.
Something not that chill happened.
Okay, and that brings part 1 to an end. Part 2 will go over what's the best argument Robinhood can offer for why it had to stop trading, as well as the rampant insider trading in our government and how GameStop could cause a whole new set of financial regulations due to this little event and what the current government response to it even looks like. Keep in mind, I also have other videos in the works, and the speed and content will increase as I get the hang of this whole making YouTube videos thing. There's plenty of videos I want to make going over the pandemic and its lasting economic effects, as well as maybe even a possible podcast. If you enjoyed this video, feel free to appease the YouTube overlords and subscribe and leave a like in the hopes that the algorithm will maybe do something in my favor.